bit more edge than, say, your standard motorcycle. So that will be unveiled here, perfect for our market as well.
How big is your line right now? How many kinds of bikes are you selling?
The Ducati line has actually grown dramatically. When you think about 10, 15 years ago, there were 3 or 4 models. Now we've diversified out to having multiple different families, from having entry with the Scrambler brand or even with the Monster, all the way up to our Superbike here. But we also address the off-road segment, the dual sport segment, cruisers with the X Diablo that we launched earlier this year, and really with the intent of broadening our range of still always keeping that DNA, that sport bike DNA that Ducati has, but through all these different segments so that we make more motorcycles for more people.
How's demand in North America? Of course, the market that you care about the most here. Are new people getting into riding these bikes?
Yes, they are. And it's actually helped a lot by a lot of the manufacturers, including ourselves, that are building bikes that can address those new markets and make it attractive for people to come in. But the other thing that's really helped as well is we've really been focusing a lot on safety and utilizing technology to be able to increase the safety on motorcycles through traction control, ABS, wheelie control, these sorts of things that will help bring people into the sport that maybe they might have been opposed to before because they had some of those concerns. I mean, you still can't make up for the drivers on the road, but at least you have an opportunity to be able to improve the safety a bit for the rider.
Looking again at this bike, what do you intend to take from it and maybe to apply to the other bikes in your line?
I mean, this is quite common for Ducati. Whenever we have our flagship, you'll find in the future that a lot of the technology, specifically the electronics, will work their way into other models as well. When we first introduced traction control a few years ago on one of our super bikes, it's made its way into most of our motorcycles as commonplace. So, you know, you'll see the elements like the carbon fiber but mainly the electronics are really the thing that you see becoming more and more common in our entire lineup.
You've been on the job now for a year?
Yes.
Almost a year, if I'm not mistaken. What's it been like? What have you learned? What's the biggest surprise been to you heading up this company?
Well, I spent 9 years at Ducati before, and I spent 3 years at Lamborghini and just came back. And for me, coming back to the brand, it reminded me why I came back, and I remembered why I left it. Like, I mean, at first, why I came back, excuse me. And that is the passion behind the brand. And this is something that, you know, this is not transportation. This is entertainment. And people can use these to get from point A to point B, but you get on this for an escape and for that adventure. And for me, coming back into motorcycling, although I, of course, keep my motorcycles and rode them, when you're working in it, you remember how you connect with other people because of motorcycling. I mean, it makes them smile. You roll the bike in through the Bloomberg studios.
That's true.
And everyone's smiling, taking selfies with the bike. So.
Very quickly here, end of the year, looking ahead to 2017, what are you most excited about?
I'm most excited about an opportunity for us as a brand to be able to build awareness.
Yeah.
And this is something that over the last few years, there's ideas or perceptions about our brand, largely because we've been so strongly rooted in sport motorcycling. But the future allows us to hopefully address the opportunity of bringing new people into motorcycling and through our brand, hopefully.
Jason, thanks for coming in. Thanks for bringing the bike.
Pleasure.
As well as Jason Chinnick, he's the CEO of Ducati North America. And for more, check out Pursuits, your destination for the finest things in life, including travel, watches, dining, and property. Just head to NI Pursuits Go on the Bloomberg. Still ahead, we're going to talk to Dr. Toby Cosgrove, one of the most powerful men in healthcare, just named to President-elect Donald Trump's Strategic and Policy Forum. This is Bloomberg. 1 p.m. in New York, 6 p.m. in London, and 2 a.m. in Hong Kong. Good afternoon. I'm David Gura. Welcome to Bloomberg Markets. From Bloomberg World Headquarters in New York, we're covering stories from San Francisco to Toronto and London this hour. First up, we'll speak with the president and CEO of the Cleveland Clinic, Toby Cosgrove, about his role in President-elect Donald Trump's economic panel. Plus, major averages are hitting new highs today, and we dig into tech stocks with the FANG stocks also getting a pop today. And there are worries about a marijuana bubble in Canada. Could a two-year rally there be coming to an end? But first, halfway into the trading day, let's get a check of where the markets stand now with Julie Hyman. Hi, Julie.
Hey, David, we're seeing stocks pretty much at the highs of the session here. They have been little changed out of the gate, but have been gaining strength as the ECB decision this morning was seen as more dovish, more stimulative for markets, with the ECB shrinking the size of its quantitative easing, but extending the duration of it through the end of next year at the least. So all three major averages have been trading at records today. The Russell 2000 is there as well. And if you look at an intraday chart of the S&P 500, you'll see the sort of bumping along the unchanged line before a surge upward right around 1230 here, with now a gain of about 1/3%. Indeed, FANG stocks are part of the story today. Apple shares, for example, have been strengthening as we've seen broad strength within technology. Apple shares up about 1%. Otherwise, in terms of the individual point gains that we're seeing contributing the most to the S&P 500, it's banks also on the list. Bank of America and JP Morgan strengthening, along with the continued sell-off in bonds, rise in bond yields that has characterized the period following the election. And speaking of those yields, and also speaking of the effect on rates and currencies, take a look at the euro today. We are now seeing the euro weaken. Initially, the movement was up following the ECB decision. But then as the press conference happened, as there was more commentary from Mario Draghi, we saw the euro fall down. So it's now down about 1.4%. Likewise, we are seeing a rise in yields, interestingly, in the U.S. as the sell-off continues there. That has also characterized some of the European trading action within rates. And finally, a bit of a curveball for you today, David. We are looking at lean hogs, and that's because they've been on quite a price run here over the past several sessions. The 1-week chart showing a gain of about 15%. So that's just one commodity that caught our eye here, as we are seeing slaughtering rates go down a little bit as the price has climbed up here, Dave.
Julie Hyman, who knows this North Carolinian's love of barbecue. Julie, thank you very much. Now let's check in on the Bloomberg First Word News this afternoon. Taylor Riggs has more from our newsroom. Taylor?
David, President-elect Donald Trump intends to pick fast food executive Andy Puzder as labor secretary. That's what sources are telling Bloomberg BNA. Puzder is an economic advisor and surrogate to Trump on the campaign trail and is an outspoken critic of the Obama administration's labor policies. Puzder is head of Hardee's and Carl's Jr. burger chains and said he opposes the department's overtime pay rule, which was temporarily blocked by a federal judge last month. And there's a report on what Donald Trump intends to do with his business once he becomes president. According to the New York Times, Trump may formally turn over the operational responsibility for his company to his 2 adult sons, but he intends to keep his stake in the business. Meanwhile, the Times says Trump's daughter Ivanka would take a leave of absence from the company. She may move to Washington to advocate for various issues. The U.S. and Russia held talks today on Syria and the battle over the city of Aleppo. Secretary of State John Kerry says he's hopeful that a siege of the city can be lifted. Kerry spoke with Russian Foreign Minister Sergei Lavrov in Hamburg. Russian-backed Syrian troops have tightened their grip on Aleppo, which has been a rebel stronghold. And a decades-long trend of rising life expectancy in the U.S. may be over. It declined last year, and it is no better than it was 4 years ago. In most of the years since World War II, life expectancy in the U.S. has inched up. But last year it slipped, a rare event in a year that didn't include a major disease outbreak. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. David?
Taylor, thanks very much. President-elect Donald Trump is tapping some of the most formidable business leaders in America for strategic advice after he takes office. A panel chaired by Blackstone's Steve Schwartzman and is comprised of a number of CEOs like Jamie Dimon and Mary Barra. The goal, according to the president-elect, is to get recommendations on economics and business. And also on the panel, Dr. Toby Cosgrove, the CEO and president of the Cleveland Clinic. Cosgrove has run the clinic since 2004. He started there in 1975 as a cardiac surgeon, and he joins me now. Great to have you with us here in New York.
David. Nice to be here.
Let's start with how you came to be on this panel, on this committee of experts. How'd you get the invite, and what are your expectations going into it?
Well, I got an email from Steve the day before Thanksgiving and talked with him on the Friday after Thanksgiving, and where he explained what the objectives were and what he'd like to do. And then I checked with the people at the Cleveland Clinic to see if this was okay, and I accepted.
So you haven't met yet?
No, we haven't met yet.
What's the mandate as you understand it? Is it purely to give advice to who will then be the president of the country?
Yeah, it's to give advice. We have no legislative power whatsoever, so it's advice only.
What do you make of the composition of it? You're there representing healthcare, a lot of people from financial services, some people from consulting.
Yeah.
You know, I'm sure you've been on committees like that before with that kind of diversity. How often does it yield to real results?
I haven't been on these sorts of commissions before, and it's a great privilege to be there, and it's a distinguished group of individuals from various walks and very important leaders. And I think that this, my understanding is President-elect Trump wants to hear from people, and that's the way he learns, and we will give him unfiltered advice.
Give us a preview here. We'll give you a chance to warm up when that committee first meets in February. What are you going to say about the healthcare economy in this country right now?
Well, you have to understand, first of all, that healthcare is the biggest portion of the economy and bigger than any other industry. It's 18% of the GDP. It's undergoing an enormous change right now, the biggest change in a century, and it is affecting 100% of the people. So this is a very important issue, not only for jobs, but for the health of everybody. So I think it's everybody recognizes it's got an important part to play. Now, the Affordable Care Act, I think, really was designed to control the cost of health care. Hence the name affordable. Affordable for individuals and affordable for the country. The concern, I think, right now is that it's not really done very well on either one of those. The cost of insurance is going up, and inflation rate for the first time has reached 5.8% after having gone down from 2008 to 2 years ago. So this is really an issue that I think we in the country have got to begin to deal with.
And we'll talk a bit more about that here in just a couple minutes, but looking back at that sector of the general economy, this is the part of the economy you know best. How applicable is what's going on in the healthcare sector to the economy writ large?
Well, you have to understand that being the biggest employer, it certainly has a major portion to do with it. And it also produces exports, and its health care from the United States is wanted all over the world. So it's an important export as well as an internal driver of the economy.
You brought up the Affordable Care Act. President-elect Donald Trump was on 60 Minutes a short while ago. He was talking with Leslie Stahl about that, among other things, and she asked him sort of what the future looks like for patients who have pre-existing conditions.
Yes, because it happens to be one of the strongest assets.
You're going to keep that.
Also, with the children living with their parents for an extended period, we're going to
You're going to keep
very
that.
much try and keep that. Adds cost, but it's very much something we're going to try and keep.
There was a sense throughout this campaign, a sense of worry about the future of the Affordable Care Act. I think from both sides, sort of acknowledging there are problems with it. What's the law going to look like in the future? How worried are you about what this law is going to be like in 2 months, 6 months, 2 years from now?
Well, my guess is that there's not going to be a repeal of everything. It's a very big bill. It's a very complicated thing. It's something that the healthcare industry has been going down the road now for 7 years, and to just completely wipe it out would be incredibly disruptive. I think there'll be a period of transition over time, and we'll have to see how that works out.
I imagine that while that law was being written, you followed it closely. I wonder if you were consulted as well. I recall speaking with the CEO of Aetna a few months back, and he said that a problem as he saw it was the heads of insurance companies weren't consulted to the degree he would have liked. Was something wrong with that process? Was this written too hastily or not as inclusively as it should have been?
Well, you know, I was consulted, but it seemed like it was more of a photo op than it was really listening to what we had to say. An hour of 10 people giving their input is not really in-depth response to a very complicated problem.
You look at the rhetoric surrounding financial reform, say, there's an impulse there to repeal it, to get rid of it completely from folks in Donald Trump's camp. Same thing is true of health care. There's a lot of talk. There has been a lot of talk about getting rid of Obamacare or the Affordable Care Act.
Yes.
Are cooler minds going to prevail here? Do you think that we're going to get a constructive conversation in Congress, in Washington, about what facets of this law should stay and what should go?
I think very definitely we will. I mean, I think you have to understand that regardless of what the president wants, it's only one branch of the federal government. And it's certainly a moderating effect that goes when you get into Congress. And I expect that we will see this as there are a number of issues that are being addressed and a number of constituents that have to be addressed in the process. So this is going to not be a quick fix, I don't think.
What President Obama will say and has said is that you're trying to gauge the efficacy of this law. You've seen 20 million people get insurance who didn't have it before. Yeah. As you rate the successes and deficits of the law, how large does that loom, the fact that you do have more people now?
So I think the law was really designed to do three things. It was designed to increase coverage, and as you say, 20 million more people got covered. It was designed to improve the quality of care. And if you look across the country, the quality metrics have gradually improved. The one thing that has not has been the bending the cost curve. Now, there's really only two ways you can bend the cost curve. One, you can have a more efficient delivery system of people who are sick. And two is you can keep people well. And there's triggers that you can pull in each one of those. If you look at, for example, taking care of people who are sick, I think you're going to have to begin to understand that you've got to consolidate the healthcare delivery system. In Ohio, we have 202 hospitals. And if you look at every other industry in the United States, you've seen consolidation of those industries for efficiency. I think that the Justice Department has not wanted to see that happen across the healthcare industry. Then you look at the other side of it and keeping people well. Two major things, cigarette smoking and sugar and obesity. And we've got to begin to address those as a nation. The number one preventable cause of cancer is smoking, and certainly a major contributor to obesity is sugar. And there's not a lot of appetite for addressing either one of those, but I think as a nation, ultimately, we have to come to grips with that.
All right, let's talk more about preventative care when we come back. That's Toby Cosgrove, the CEO and president of the Cleveland Clinic. He's going to stay with us here, and coming up, we'll talk about the challenges as well behind the Affordable Care Act and whether President-elect Donald Trump will dismantle that legislation fully. This is Bloomberg. This is Bloomberg Markets. I'm David Gurr. We're back with Dr. Toby Cosgrove, the CEO of the Cleveland Clinic, and I want to get his thoughts on President-elect's pick of Congressman Tom Price, the head of Health and Human Services. Price, a strong critic of the Affordable Care Act, of course, and he wrote this in an op-ed on townhall.com. He said, President Obama says the law is working as intended, and Democrats continue to stand behind it. When confronted with its failings, their solution is always to get the government even more involved in health care, but we know how that story goes, and fewer choices and higher costs are not working for the American people. Let me get you to react to that. I look at Tom Price and his background. He is somebody who has proposed changing the law. There's actually some concrete steps he would propose we take to change the law. Do you know him, and what do you make of the pick?
I don't know him. I know his background. I don't know him. I don't know his policy.
Do you think that HHS is going to play a bigger role in this administration, a different role? How much power does the person inhabiting that office have?
I think it totally depends on what the president allows them to do. If the president allows them to have major influence, that is possible. If the president doesn't and wants to control it all from the White House, that's a different story.
I go back to what you were saying about how you were consulted earlier on. It felt more like a photo op. How does the government get more engagement with the private sector in healthcare? Is it through commissions like the one that you're going to be on, or does it need to be even more regular than that?
Well, I think it needs to be a regular input, and it needs to be in leaders in the various segments of the economy and the segments of society. And there's an awful lot of people, since it involves everybody in the United States, there's an awful lot of people who are going to be affected by this.
We were talking before the break about preventative care. You're in a position where you must think a lot about the future of healthcare in this country. I think the focus for so long over these last few years has been on insurance, pure and simple, but you have to think more broadly than that. What does health care look like in this country going forward?
Well, I think, we've been talking about sick care most of the time. I think we really need to talk about health care. And health care is not going to be driven out of Washington because the things that are important, like smoking and sugar, are not going to be very popular amongst the people who are being elected to Congress. So I think the private sector has an enormous part to play there. One of the things that we have done is, with our 80,000 employees, we started 10 years ago with an inflation in our healthcare costs going up 7.5%. And by managing the wellness programs across the organization, free curves, free Weight Watchers, not hiring smokers, etc., we've seen two things happen. We've seen the better care of patients, and the patients who are part of the program have 20% less chance of coming to the emergency room and 20% less chance of getting admitted to the hospital. The same thing, we've had a financial benefit from it, and the 7.5% increase in inflation rate has gone from 2.5 negative. So we're not having to raise the premiums now for our employees as part of the health care problem.
Before I let you go, I want to ask you about prescription drug prices. There was an expectation after the election. You saw it in the stock market. There was a bet that Donald Trump was not going to do as much as Hillary Clinton might have to bring those costs down. He said something different in an interview with Time magazine yesterday when he was named Person of the Year. What happens with this populist outrage about the price of pharmaceuticals? How is that channeled into real change here? It seems like Congress may have some willingness to do something about it. How do you fix this problem?
I think this is a very tough problem to fix. Certainly we're not going to have price controls. I think that's out of the question. I think very unlikely that we're going to have imports coming into this country. I think the main thing you can do is encourage the FDA to move things through faster so that you get more choices of generics, etc. But I think we still have to deal with the fact that the average increase in drug prices is 10% per year. While we are now at a fraction of 1% inflation rate, and we've had we had a 19% jump in our pharmaceutical bills last year. That is a main concern for a lot of people. It's not the only factor that is driving healthcare costs, but it certainly is a contributor that is disproportionate to other things.
What could Congress do? I think of the argument that a lot of these pharmaceuticals companies make. They say, look, we pay a ton of money for research. To get these drugs that work costs a lot of money.
It does.
What can Congress do? What could the government do then, if not impose price controls?
Well, let's look at one thing that's interesting. We now have a tremendous amount of advertising that goes on in the pharmaceutical. There's only 2 countries in the world that allow pharmaceutical to advertise, New Zealand and the United States. It would be very nice if we had total transparency around cost and advertising budgets, etc. And then I think we would begin to get someplace.
Dr. Cosgrove, thanks very much for being with us. I appreciate it. Nice to see you. Toby Cosgrove, the president and CEO of the Cleveland Clinic, joining us here in New York today. Still ahead, the FANG stocks notoriously have underperformed since President-elect Donald Trump's victory exactly a month ago. Now they seem to be roaring back. We will dig into that next. This is Bloomberg. This is Bloomberg Markets. I'm David Gura. Time for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. The European Central Bank has extended its bond buying program. ECB President Mario Draghi warned in Frankfurt today that the latest stimulus push may not be the last if it doesn't reach its inflation goal. He cited political uncertainty and inadequate government reforms as reasons for expanding the central bank's asset purchase plan to at least $2.4 trillion. British energy network operator National Grid has agreed to sell a majority of its UK gas distribution business. The price, $4.6 billion in cash. The buyers, a consortium that includes Allianz Capital and Macquarie Group's infrastructure unit. National Grid will retain a 39% stake in a new holding company for the business. And Koch Industries, the firm headed by billionaire GOP backers Charles and David Koch, is not on board with the proposal by House Republicans to replace the corporate tax with a 20% fee on U.S. companies' domestic sales. House Republicans also want a 20% levy on imports of foreign goods and materials, though exports would be tax-free. Koch says the plan raises prices on consumers and should be, quote, devastating to the economy. And that is your Business Flash update. As the U.S. stock benchmarks are hitting intraday record highs, the FANG stocks are roaring back after notoriously underperforming since President-elect Donald Trump's victory last month. Bloomberg TV editor-at-large Corey Johnson is standing by in San Francisco with the takeaways on the tech sector. And Corey, let's start with what's led to the turnaround here.
Well, I think we need to separate what the market is doing writ large and some sort of specific business problems. Now, it's true that the FANG stocks, Facebook, Amazon, Netflix, and Google, have led the market for much of the year. That separation started to occur dramatically, as you mentioned, a month ago. And yes, it's been a month since Donald Trump was elected president-elect at this moment. And of course, what's happened with those stocks has been dramatic. The underperformance of those stocks is significant, about 50 or 60 basis points worse than the rest of the index. But as you mentioned, they are coming back. And at a certain point, what I think it's useful to do is really try to imagine what the business impact of a Trump administration will be when you start to revalue these stocks. Because some of the things, as we've discussed in the past, might be ridiculous. The notion, for example, that Amazon will suddenly owe more back taxes under a Trump administration than it just owes according to the law seems silly. But with other companies, there are some serious concerns about changes in policy that could affect operating costs going forward.
You know, I know you've been focusing on the N in FANG in particular, on Netflix.
Yeah.
And what are you seeing there as you look at its financial future here?
Well, Netflix, of course, is governed so much by the FCC. Netflix is responsible for a substantial amount of traffic on the internet. In fact, Netflix and YouTube together, by some measures, are as much as a third of the traffic on the internet. So the notion that their costs might change as the business evolves and as the FCC rules change might be one to take seriously. The FCC, by designation, can never have more than 3 members from any one party. There are 5 members of the FCC right now. Now, Jessica Rosenworcel, her role could be over unless she's reconfirmed by Congress this month. But beyond that, Tom Wheeler, as chairman, is going to be replaced by someone named by the Trump administration. And that's a concern because a lot of the policies put into place over the last 8 years have been about opening up the internet, net neutrality, and about taking away the costs from individual providers. That is to say that the traffic from a Hulu or an Amazon or a Google will cost the exact same amount as traffic from a Netflix. That could change under a different FCC, and that might be a change. We brought up briefly the Netflix operating margins, and I think I want to pull it up again because you can see that Netflix profitability is razor thin. Those Netflix operating margins are so slim, their free cash flow return is non-existent, so that if costs go up a lot, if they have to carry their weight and pay their way onto cable systems, onto the distribution platforms, that's dramatically going to change the way their business works.
Very quickly here, Corey, Netflix was invoked on Capitol Hill yesterday, that first hearing about the AT&T Time Warner merger. How worried is Netflix about that merger going through?
I think that if Netflix has to pay a lot more, like the other carriers, it's going to be a big concern for them. Because what happens for Netflix is they're able to really spread to other internet service providers, into the cable companies in particular, the cost of running their business. When they have to bear that cost, if they have to bear that cost in a new FCC, it's going to dramatically change their hopes of profitability, their ability to spend on content, and maybe the future of the business.
All right, Corey, great to speak with you as always. Thanks very much. That's Corey Johnson. You can hear more from him in about half an hour when he's joined by Carol Massar for Bloomberg Markets on Bloomberg Radio. Up next, author Michael Lewis on his newest book, The Undoing Project, about how 2 Israelis set about undoing assumptions about decision-making. That's next. This is Bloomberg. live from Bloomberg's World Headquarters in New York. I'm David Gura. This is Bloomberg Markets, and let's start with the headlines on the Bloomberg First Word News this afternoon. Taylor Riggs has those for our newsroom. Taylor?
David, 2 Democratic senators are plotting to block the confirmation of President-elect Donald Trump's EPA nominee. Senators Shelton Whitehouse and Brian Schatz plan to leverage corporate concerns about climate change and pressure moderate Republicans to oppose Oklahoma Attorney General Scott Pruitt. Pruitt has been a fierce critic of the agency he now plans to lead, even suing over regulations. President-elect Donald Trump is back on the road today. He's flying to Columbus, Ohio to meet with victims of last week's Ohio State University attack. He'll then take his thank you roadshow to Des Moines, Iowa for his 3rd post-election victory celebration. Tomorrow, he's holding rallies in Baton Rouge, Louisiana, and Grand Rapids, Michigan. And in London, it's the 4th and final day of a Supreme Court hearing on Brexit. The justices are being asked to decide who has power to trigger the exit from the European Union. The government argues it can use what's called royal prerogative to invoke the formal start of Brexit talks. Lawyers challenging Prime Minister Theresa May say she'll trample hundreds of years of British law if she begins Brexit without a vote in Parliament. 5 jurors were undecided in the case against a former white police officer charged with the murder of a black motorist. That's according to the jury foreman. Dorsey Montgomery told NBC News he initially wanted to convict Michael Slager. Jurors deliberated more than 22 hours over 4 days before a mistrial was declared. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. David?
Taylor, thanks very much. 2 psychology professors who met in war-torn 1960s Israel. They are the focus of Michael Lewis's newest book called The Undoing Project. The book details Daniel Kahneman and Amos Tversky's original studies undoing our assumptions about the decision-making process. Earlier today, Bloomberg's Tom Keene asked Lewis how hard it was to make behavioral economics interesting to the reader.
It wasn't as hard as you made it sound, because I had 2 spectacular characters who were in love with each other and had this tumultuous, romantic kind of, not
there were
sexual.
points where they hated each other.
I mean, it was the story has the shape of a love story. So there was an emotional core to it. That was part of the secret to the ability to write it as a book. But the other was their ideas have had so many consequences in the world. I mean, it's touched Wall Street, it's touched sports, it's touched medicine, it's touched the law. And what I wanted to hammer home to the reader, it opens in the front office of the Houston Rockets,
right,
where you see the ideas Kahneman and Tversky cooked up actually being played with, having an effect on the way NBA players are being drafted.
The cooking started in Israel. These were 2 obscure academic psychologists in Israel, right?
Yes.
And then they come to America. Where did the acclaim and the fame begin?
Not really until they came here, but being an academic psychologist in Israel in 1969 or 70, it's a different thing than being one here. Yeah. I mean, they go off and get shot at every 6 years.
Well, Mr. Tversky was cited for bravery and a captain.
Well, he was a Spartan. I mean, he was a warrior. And Danny Kahneman essentially does Moneyball for the Israeli army. He designs an intake system to decide, an algorithm to decide who is going to be an officer and who is not, that they still use today. He did it in the 50s. So they're in and out. They're so in touch with the world outside of academia that it's not that hard to make swing on the page.
Cass Sunstein, an acclaimed academic out of Chicago, and of course his service with the Obama administration, writing for Bloomberg View often. I love what you say on page 342, the exploding of light bulbs. I felt that when I read the finance, the economics part of Kahneman and Tversky. Explain the exploding of light bulbs for somebody in sports.
Well, in the first place, this is how their ideas spread. People outside of psychology read it and went, oh my God, this affects my discipline. Because everything runs through the human mind. In sports, what you get is, you get Moneyball. You get an understanding that the misvaluation of professional athletes, in this case baseball players, by the marketplace, is a systematic misjudgment by experts about the value.
So
of
this would be the Boston Red Sox buying the gentleman from the Chicago White Sox for more money than God. Brad Pitt didn't do that in your movie.
But this misjudgment that the market makes of players, overvaluing some, undervaluing others, actually grows out of basic processes in the human mind that these guys describe.
We're witnessing this week. I mean, the Yankees ponied up 80-some million for somebody and 60 million here for the Red Sox. Nothing's changed since Moneyball.
Well, it has changed because all these front offices are, I don't know if Chris Sale is worth what they paid or what they gave up for him. I don't know. And it's possible he is. But the bigger point is that the counterweight to the misjudgment of the experts is to have a statistics, analysts to actually grinding numbers to give you a better sense of the probabilities of the value of the future performance of a baseball player or a basketball player or whatever. And this has swept sports. And it swept sports for the reasons these guys describe, because experts using unaided intuitive judgment make errors.
Stephen Eisman joined us a few weeks ago on Bloomberg Surveillance with, really challenging views of the market as only he can do. He was a character in the movie The Big Short. Did the characters of The Big Short do the Undoing Project? Did they do Kahneman and Tversky?
The one character with whom you can kind of establish a connection between that character and these guys is the Michael Burry character. Michael Burry himself, and then people know the movie more than the book, the character Christian Bale plays. And the fact that he was like, the world is saying this, and he's doing nothing but looking at the numbers and seeing that actually these loans that are being packaged into subprime mortgage bonds and then being replicated over and over in credit default swaps, that actually they are. That the world's judgment of these things is really screwed up. But there was more going on than just human misjudgment in the financial crisis. I mean, they're bad incentives. I mean, like, people were paid to do stupid things, so they're going to do stupid things.
When I look at all this, and I love the phrases that you drop in, and this is true of each and every one of your efforts, and there it is in the middle of the book, Famous Amos. Who was Famous Amos? Was he paired with the much better known Daniel Kahneman?
Well, Daniel Kahneman is now much better known because he won the Nobel Prize and because he's written this book, Thinking Fast and Slow.
And because he didn't die at 59.
Because he didn't die at 59. But while they lived, Amos was by far the better known person. He was a rock star. Amos Tversky, he was quirky, funny, fresh, not pretentious at all, but regarded by everybody who met him as the smartest person they had ever met, to the point where actually a psychologist designed a one-line intelligence test, and it was, the longer it takes you after you've met Amos to figure out that he's smarter than you, the stupider you are. And everybody who heard that said, yeah, that's right. And Amos had, what he had was an ability to see the ideas that were coming out of Danny and see that they were generalizable and extremely important, and give Danny confidence in the idea. Danny was this idea-generating machine. And Amos just had a clarity of mind. His mind is the mind of a diamond cutter, and he's able to kind of take ideas and shape them so the world accepts them.
That's Michael Lewis, their author of the book The Undoing Project, earlier today with my colleague Tom Keene. Coming up, the surge of capital into Canada's budding marijuana industry has sent stock prices soaring, but is it a bubble that could soon burst? We'll head to Toronto for the latest next. This is Bloomberg. This is Bloomberg Markets. I'm David Gura. Sears stock is rising today, but it's left some investors scratching their heads as to why. The department chain store posted a $748 million third quarter loss as it saw comparable sales fall again and will close even more stores. Let's see what the numbers show. In today's, the numbers don't lie. You see here that this big quarterly loss, this brings the cumulative damage to $9.35 billion in the past 8 years. Sears needs to raise about $1.5 billion to make it through 2017 comfortably. That's according to one analyst at Moody's Investor Service. The billionaire behind Sears, Eddie Lampert, has spent years propping up Sears by selling off its household brands and real estate. You can see here the decline in store count for Sears. Today's results put pressure on Lampert to find even more assets to sell to generate cash. The financial losses are a result of slumping comparable sales. And as you can see here, Sears posted only one quarter, a single quarter of positive sales growth since 2000. That is that green blip there, that mountain, small mountain in the middle. Last quarter, same-store sales dropped more than 7%, which includes a 10% plunge at U.S. Sears locations. It was not supposed to be this way. Lampert merged Sears and Kmart in 2005. Investors were hopeful, betting on the company's underlying real estate value, sending the shares above $100 at one point. But sales in the stock, well, they never really picked up. And in the meantime, the restructuring continues. The company may sell its Craftsman, Kenmore, and Die Hard brands along with its Sears Home Services business in order to stem these losses. One Sears executive, though, said today that, quote, "We cannot guarantee when we will return to profitability." Of course, we'll be following Sears stock throughout today's trading session. Have more of it here on Bloomberg Television. As Canada continues its march toward legalization of marijuana for recreational use, Toronto Stock Exchange-listed pot companies could be nearing bubble territory. The value of the 26 marijuana stocks has swelled to almost $3 billion from close to nothing over the course of 2 years' time. Bloomberg TV Canada anchor Pamela Ritchie joins us now with what could trigger a decline in the heated share prices. And Pamela, let's start with the basics here. First of all, is the legalization of pot in Canada a surefire thing?
Well, David, Canada is on track to be the first group of 7 country to legalize pot for recreational purposes. It would follow the country Uruguay in South America, which legalized it for the same purposes in 2013. And in November, the Trudeau government brought out proposed legislation that was trying to hit a number of practical issues of how a pot market would actually exist in this country. The truth is, though, how it would be regulated, the details on regulation, how it would be taxed, how it would be distributed. If it's on a medical marijuana basis, does it go through the pharmacies or does it go through what we call the liquor control boards, basically the liquor stores here, and get regulated that way? All of those details far from being worked out, and so these stock prices are certainly jumping, but really on a future story at this point. There's a lot to be nailed down.
A really nascent sector still here, as I said, just about 2 years old. When you look at the companies involved in the pot economy in Canada, the ones growing marijuana, marketing marijuana, are they seen by investors and analysts as quality stocks?
Well, there are 2 different voices on this. If we look at the stocks themselves, I think you're even putting up some charts. So Canopy, which is Canopy Growth Corporation, it's the first marijuana unicorn in Canadian terms. It hit 1.24.
This is Bloomberg Markets. I'm David Gura. Alphabet makes a lot of money. You may already know that. We were just talking about it with Corey Johnson a few minutes ago. Google's profitable businesses bring in almost $27 billion a year. But those much talked about moonshots like the self-driving cars and game-playing bots, those businesses lose almost $4 billion, and Alphabet is trying to do something about that. This is the cover story in the latest Bloomberg Business Week, and reporter Max Chapman, who wrote it, joins me now. Perhaps most memorable to a lot of people would be the Google Glass.
Right.
Which was widely disliked by a lot of people who saw people wearing them, felt that their privacy was being, but it failed. Google stopped making it. What have they learned from that?
Well, the Glass experience kind of embodies a lot of the things that maybe were arguably problematic at Google, which is that amazing technology, not so sharp on the sort of business side of that. And one of the reasons that may have happened, one of the reasons my co-writer and I, Mark Bergen, think it happened is because basically Google operates in these fiefdoms where you were sort of part of Google, but not all the way part of Google. So basically, you build this great thing, and then they do a bad job marketing it. And the reorganization of Google as Alphabet, which happened last year, hiring of this hotshot CFO, Ruth Porat, was all about basically fixing that. And that's kind of what we investigated.
Yeah, so Ruth Porat comes in, Bay Area native, goes to Morgan Stanley, then goes back to Google. She's nicknamed Ruthless Ruth. She's not buying into many facets of the Google culture.
Well, the thing is, she's been very controversial within the sort of moonshot sectors of the Googleplex. On Wall Street and in the main part of Google, they like her. They think she's doing a good job. And there was an attitude, I think, in parts of Google that these moonshot people were basically wasting money. She is basically bringing a little bit more structure to the company in terms of budgets and making the timelines a little bit more ambitious. On the other hand, it's still a weird place. I mean, they're still making driverless cars, trying to make drones, trying to make balloon internet. So, you know, you sort of have to look at it in the context of how crazy Google was before, and it's a little less crazy.
Must have been a couple months back. I saw the headlines that the head of Google Fiber was out.
Yeah.
There's been a lot of churn in that part of the business. What are people's sense of the prospect going forward? In other words, how long they can play around with or try to make one of these projects work?
Yeah, I mean, there's been, and that's kind of what drove us to investigate here.
Yeah.
There was the loss of the head of Google Fiber, there was the loss of the CEO of Nest, a bunch of the moonshot people left. I think there's still, it's not like they're giving up here, but they're just sort of dialing back a little bit. And you could argue that it may help them. I mean, Google has the best technology on driverless cars. Nobody argues with that. But they've been beat to market by Tesla and Uber. And I think there's a way of looking at it that maybe they were too focused on the technology, not focused enough about bringing things to market, and maybe it'll help them. On the other hand, there are a lot of people who are feeling like this is not the company that it was before. It's turning into a mature, you know, boring company maybe, and so they're losing people. So we'll see if they can kind of keep the magic going.
How is this company different from Amazon? You see Amazon now making money, largely off of web services, but also spending a lot of money on these sort of out there ideas, and there seems to be less concern about it.
Well, I think one big difference is, like, I think at Amazon, everyone is really excited about the core part of the business, like that they sell a lot of stuff to a lot of people for not a lot of money, and they make as much money as possible. And I think that really genuinely excites Jeff Bezos. I think for Larry Page, the big part of Google's business is kind of boring, and that if it were just that, he wouldn't even want to be there. So it's kind of one of these companies where they've really changed the entire media landscape, and they're kind of just bored with it. So I say that's a difference, and I think that has implications for how they go about doing these other things. They're not looking for sort of areas of synergy between driverless cars and search ads.
All right, Max Chafkin, thank you very much for joining us. Going to read his story in the latest Bloomberg Business Week. This is Bloomberg.
It is 2 p.m. in New York, 11 a.m. in San Francisco, and 7 p.m. in London. I'm Scarlett Fu.
And I'm Oliver Rennick. Welcome to Bloomberg Markets.
In Bloomberg World Headquarters in New York over the next hour. Plus, we're covering stories out of Washington, Brazil, and Frankfurt. Here's what we're watching. Will 2017 be the year we see fundamental shifts in the market? Why fiscal policy and reflation risks may be the next big challenge for investors. Oil is on the rebound once again, snapping its two-day losing streak, while natural gas is building on gains. We look at why this month could prove critical for nat gas prices going forward. And President-elect Donald Trump is heading to Ohio and Iowa today. Meanwhile, he may be close to nominating CKE Restaurants CEO Andy Puzder as the next head of labor. U.S. markets closed in just 2 hours. We're extending those record highs. Julie Hyman, green across the screen.
Yeah, and it's just gotten stronger and stronger as the day has gone on. Interestingly, even though the main catalyst was in the morning, right, with the ECB decision and commentary coming from Mario Draghi, it was that commentary which really clarified that this was a dovish stance on the part of the ECB, and that sent stocks significantly higher. So all three major averages are higher and at records. The Russell 2000 as well continues to strengthen, and of course we've been watching its outperformance. So one of the ways to measure that is a ratio of the Russell 2000 relative to the S&P 500. So it's just been strengthening ever since the election. It sort of strengthened in the beginning, then went sideways, and then has taken yet another leg up relative to the S&P 500. So what has been powering the performance today in particular? I've been looking at some of the largest of the small caps. That is those that on an index point basis have been contributing the most to the gains in the Russell 2000. So you've got Advanced Micro Devices, which was upgraded by 2 levels over at Bank of America Merrill Lynch. The analysts there are saying that the company can challenge both Intel in PCs and servers and NVIDIA in gaming and graphics. Those shares up 11%. Ciena, the network equipment company, that company coming out and saying its 2017 revenue growth is faster than the market rate of mid-single digits. Those shares higher. Tailored Brands, the owner of Men's Warehouse and Joseph A. Bank, that company raised the lower end of its forecast for earnings per share for the full year. Its earnings the last quarter also beat estimates. And finally, Science Applications also beating estimates. What's interesting here is the sort of conventional wisdom has been that companies that are more domestically oriented will benefit more under a Trump administration. And yet you look at something like AMD or Ciena, and those are not necessarily exclusively domestically oriented companies. A couple other stocks we're watching on news include Express Scripts, and this was the latest company to be targeted by Citron Research and Andrew Left over there. So as he began tweeting about the company, that's when we saw the shares fall off. He said that the company is the, quote, culprit behind pharmaceutical price gouging, and Citron even compared this company to Philidor. Of course, that's the Valiant Pharmaceuticals affiliated drug distributor. Meanwhile, Express Scripts came back in a statement and said it is a market force that uniquely puts medicine within reach by driving down cost of care and improving health outcomes. So the shares have been bouncing a little bit from those lows, but still down. On top of the S&P 500 today, as Express Scripts is on the bottom, is Edwards Life Sciences. And this company is disappointed in recent quarters with its sales, coming out in a presentation at a conference today and saying that its sales will be at the low end of its forecast, but still the CEO expressing confidence in 2017, and those shares are rising by 7%, Oliver.
All right, lots of green across the board. Stocks relentless. Thank you so much, Julie Hyman. Now let's check on the Bloomberg First Word News this afternoon. Emma Chandra has more from our newsroom. Emma.
Thank you, Oliver. President-elect Donald Trump intends to pick fast food executive Andy Puzder as Labor Secretary. That's what sources have told Bloomberg. Puzder, an economic advisor and surrogate to Trump on the campaign trail, is an outspoken critic of the Obama administration's labor policies. Puzder, who heads Hardee's and Carl's Jr. burger chains, has said he opposes the department's overtime pay rules, which was temporarily blocked by a federal judge last month. Secretary of State John Kerry is calling on his counterparts in Europe to contain a slide towards authoritarian politics. Secretary Kerry told a conference in Germany freedom itself could be in jeopardy because of the escalation of populist movements. Europe has seen a rise in nationalist, anti-immigration parties as it prepares for multiple national elections in 2017. Congress is sending President Obama a defense policy bill that seeks to give Republicans the final word on key national security issues. The bill rebuffs his attempts to close the prison at Guantanamo Bay, Cuba, and reduce the size of armed forces. The Senate easily passed the defense legislation on a vote of 92-7, 1 week after the House overwhelmingly approved the bill. The defense bill authorizes $611 billion to run the military in 2017. The Pacific Tsunami Warning Center has cancelled a tsunami watch for Hawaii that was put in place after an earthquake in the Solomon Islands. The U.S. Geological Survey says the 7.7 magnitude earthquake occurred about 42 miles southwest of the Solomon Island city of Kirakira. It had a depth of about 30 miles. Global news, 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. Oliver.
Thank you, Emma. Doug Ramsey, Chief Investment Officer at Luthold Wheaton Capital Management, says the great bond bull market is about to come to an end. Here's what Ramsey said earlier today on Bloomberg Markets.
I think the secular low was in July of this year, and we could back up to 3.5%, maybe even 4% over the next 12 to 18 months. I mean, it's not that far away.
Joining us now is Catherine Rooney-Vera, Head of Research and Chief Global Strategist at Baltic. She's been speaking with some of the country's biggest asset managers, pension and insurance companies. And we just heard from our good friend Doug right there, Doug Ramsey, that the bull market in bonds is over. Too early, too soon to call it?
The market seems to think so, and I'll tell you that at the panel that I spoke at yesterday and hosted, that is consensus. The view is that the 10-year Treasury is going higher. Consensus at this panel yesterday, at this event, was 3%, a strong dollar, structurally strong move, and that we are at the end of the bull market. So this implies short duration in fixed income and a move towards equities and equity-like instruments.
And we've seen that play out across the markets with the way that equity prices have responded, and of course fixed income prices have responded as well. It seems like there's almost too much conviction in that reflation story. What are people getting wrong here?
It seems that the market is moving very aggressively, pricing in something that has not yet happened, right? Markets are forward-looking, but I do sense, Scarlett, that we could see a retracement in the first quarter if there is some disappointment, which I think is inevitable with regard to these pro-growth policies. In the net, they are good if we exclude aggressive protectionism on the trade front, but inevitably there will be some disappointment with regard to infrastructure spending. In this Congress, I just think it almost close to zero the probability of $1 trillion stimulus. So I think we're going to get a little disappointment on that front. So that would mean a retracement. I think the dollar's gone really far, a retracement in the dollar, and a retracement as well in U.S. Treasuries. That said, I think we pick up towards the end of next year.
So when there is this big expectation, that means there's a lot of room for error.
Yeah.
What will cause us to see when there's error? Is it just the Fed doesn't go on the path that we think, it doesn't support higher rates? Is it something else that happens more sort of I guess on a temporal basis, that's not necessarily regarding the structure of the interest rate hike path?
Yeah, I mean, I think the Fed is less of a concern in my view, because the dollar is so strong that I think that's concerning to the Fed, and that's going to be manifest in the FOMC communiques for over the next year. The two things that I'd be looking at is, one, in January, when we get some concrete views with regard to agenda for the Trump administration. It seems to me that we're not going to be pursuing a very aggressive trade policy, which is positive, and more if we turn to the reduction in the corporate income tax, which would be a huge boom for S&P 500 and equity markets, and focus more on the 3 tax brackets and a repatriation of overseas cash. All of that would be hugely positive. Of course, there's risks, and those risks come inherent with the next administration and what exactly those agenda priorities are going to be.
Right, and it seems like when we talk about the policy initiatives of the next administration, we're speaking in the subjunctive tense here constantly, because we don't know any of the details. Maurice Kramer, who's the Chief Sovereign Ratings Officer, in a 2017 Outlook report entitled A Spotlight on Rising Political Risks, wrote something about the EMification of developed markets. He says, "We believe it may no longer be possible to separate advanced economies from emerging markets by describing their political systems as displaying superior levels of stability, effectiveness, and predictability of policymaking and political institutions." You focus on emerging markets through your career. What lessons can you apply from the EMs when now looking at the advanced markets, the developed markets for investment opportunities?
EM outperformed in a massive way in 2016. We saw some retracement after November 8th, but it was a huge outperformance. It was precisely because of that quote. We saw convergence in risk between developed markets and emerging markets. Emerging markets looked less risky, and developed markets suddenly looked more risky. We had Brexit, we had Trump, we have Euroscepticism, et cetera. So I think there has been a convergence. The question now is pretty clear to me. If indeed we have a structural bull market in the U.S. and we have Treasury yields rising, that is unequivocally negative for emerging market fixed income. So flows are likely to slow. They have. We've seen outflows since November 8th. They're likely to slow going into 2017, but that doesn't mean that there won't be opportunistic trades. 2017 is a transition year. We're going to be going from everyone talking about deflation and recession risk, which, as you know, interviewing so many people before the election, that was what guys were talking about. After the election, we're talking about reflation and how much inflation and economic growth we're going to get. So does the U.S. lift all boats, or does potential trade protectionism hurt emerging markets?
Right. That's well, you pretty much answered what I was going to ask, but that is sort of the contest right now, because when you think about a market that goes up, or you think about people saying let's get a little more risk on, at least in the equity space, that risk on often involves getting into places like emerging markets that do have that risk as well. You mentioned the outflows. Are investors sort of getting a little bit too bearish too quickly on the emerging market space? Because it seems like it's a similar case where they're saying, all right, now this is maybe peaking out. Let's base an entire investment thesis on Trump's policies again. So it seems like there's a lot of risk based into that as well.
Valuations are still attractive in emerging markets. Actually, the flows only started happening in the second half of last year. Guys are largely underweight emerging markets. Over the past 3 to 5 years, it's been a big underperform, and really institutional portfolios have been underallocated in emerging markets. So positioning favors emerging markets. So yeah, we have seen an unwind in the inflows, and I don't think that we're going to see an acceleration in flows for next year, but I will contend that you will see some idiosyncratic stories play out and outperform going into 2017.
Such as, what are the most compelling EM stories out there in 2017?
Perhaps the one less vulnerable to the U.S. or whatever trade policies that could come into play. I personally think that the ones that are looking for, that are kind of like a new growth trajectory, or doing the right things, or kind of a change in trajectory, you know, Brazil, Russia, India, Argentina, I like, Peru, all of these names are the ones that we're looking at in Bulltick.
Just real quickly, the unwind in the bond market, yields going up, but stocks have done pretty well despite those bond proxies lagging. Is that, how good of a sign is that?
For U.S. equities?
The fact that the market can still kind of stay together as the bonds are selling off.
Yeah, I mean, I think one of the things that I actually wrote in my notes to send to you is that divergence and that breakdown in correlations. Remember? Like everything was correlated. Fixed income, equities, everything was correlated. Now we're in a new paradigm where you have to be, you know, the correlation is broken down. So actually, I think S&P 500 ends the year north of 2,300. I do think multiples expand. I think that you could potentially get animal spirits come into play in the second half of the year, but we would need to some of these policies that are already baked into prices come to fruition.
Right. A lot in the expectation group.
Yeah.
Catherine Rivera, Head of Research and Chief Global Strategist at Bulltick. Thanks so much for coming up from warm Miami to come to New York.
All right, coming up, decoding Draghi. Is the market getting mixed signals after today's decision, which did extend asset purchases, but also cut the monthly bond buying amount? This is Bloomberg. Bloomberg Markets, I'm Scarlett Fu.
And I'm Oliver Rennick. It's time now for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. The aerospace and transportation company Bombardier plans to slash another 2,500 jobs in Germany. That's according to Handelsblatt. The cuts will hit 3 separate plants. Bombardier also plans to replace the head of its Germany operations. And British-based pharmaceutical company AstraZeneca says it's eliminating about 700 jobs in its U.S. commercial business. That includes about 120 at its headquarters in Delaware. The cuts will also affect sales and non-sales positions. One of the world's biggest clothing retailers is being accused of tax dodging. The Green Party says Inditex, which owns the Zara and Massimo Dutti brands, has used aggressive techniques to sidestep at least $624 million in taxes. The Spanish clothing giant denies the claim. And that is your Bloomberg Business Flash update.
The European Central Bank is cutting back its asset purchases to 60 billion euros a month, but it also extended the purchase program through next year. ECB President Mario Draghi, it's not clear whether he's being dovish or hawkish here. Earlier, Bloomberg Daybreak America spoke to Andrew Bosworth. He is the head of PIMCO's portfolio management for Germany.
60 is certainly less than 80. I see this as tapering to the extent that it is open-ended. Yes, there are some dovish elements to it. You know, they've put in language in there to increase the run rate or increase the duration if the situation deteriorates. But clearly, Draghi has turned the supertanker QE towards the exit by cutting the run rate down. So I see it more as a hawkish move. Confidence on their side that they are reaching their goals. Although we look at the average inflation rates that they're forecasting out to 2019, it's only 1.5%. So I really see this as backing away a little bit from their 2% target. 1.5% is the new 2%.
So, Andy, I don't want to hold you accountable for the markets in any way, shape, or form, but why is it that the euro has come off so sharply while Mario Draghi was talking? It actually spiked up initially on the announcement, and then the more he talked, the more it went down against the dollar.
Well, it is a stealth rate cut. They are cutting rates without actually cutting rates. They're cutting rates because they are expanding the eligible universe for bonds down into the one-year area, and they're giving themselves the option to buy bonds at interest rates below the deposit facility rate. So to the extent that they do that, they will become the marginal price setter of those bonds in that one-year area. And if they're buying bonds at minus 0.8%, then that's where the market is going to trade. And therefore, they've engineered a rate cut which weakens the euro without actually cutting the policy rates.
Does that mean that the trade is sell the long end, buy the front end going forward?
Well, I think, these policies for sure will put a steepening bias onto the yield curve. That's the immediate price action we've seen. It's also positive for the banks, actually. The steeper yield curve helps their net interest margins. It enables them to finance in the money market and the repo markets at interest rates below the deposit facility rate, and then they can reinvest that QE liquidity back at the ECB at the minus 0.4%. So it helps the banks. It'll put a steepening bias to the curve.
So, Andy, I'm curious about what this means for investors, and be specific about this question. At the same time, we're anticipating a Fed meeting next week where they will be raising rates, and there's anticipation there will be multiple 2, 3, 4 rates next year. We have increasing divergence. If we have a stealth rate cut on the other side of the Atlantic and we have increases here, what does that mean for investors?
Well, it's going to mean that the U.S. is the locomotive of growth in the world, and therefore assets that are sensitive to growth, the ones that will be attractive are going to be those ones that are more located in the U.S. area, the U.S. the economic area of the U.S. From a bond perspective, it puts a bias towards wider spreads between the U.S. and continental Europe. Those spreads however, already are at very wide levels. And I think, to the extent that the rest of the world, take Japan and take the euro area as examples, are still lagging behind, that'll act as a bit of a brake on the U.S. economy and therefore on how far the Fed can go. Because if the Fed, out-delivers the forwards on the policy rate, the dollar will get stronger, and that'll initiate a feedback loop via the financial conditions in the rest of the world, on to the U.S. economy and therefore Fed policy.
That was Andrew Bosworth, PIMCO's head of portfolio management for Germany.
Still ahead, is it a loophole or simply a savvy move? We'll take you inside the property tax battle that Walmart and other retailers are waging. This is Bloomberg.
want to move on now to the battle brewing between big box retail and small town America. Shannon Pettypiece, U.S. consumer reporter for Bloomberg, has been investigating how retailers have adopted a novel tax ploy to sharply reduce their property taxes in small towns and cities. And she joins us now. So lay out this new strategy that these big box retailers are using.
So for years and years and years, the property tax appraiser for the county would come and look at the store, look at how much did it cost to build it, how much was the land, they'd minus any depreciation, and that would be the value that they'd use for your property taxes. Well, in 2010, there was a lawyer in Detroit who felt that this was not the best way to value these stores and came up with a new strategy looking at comparable sales of abandoned, not even abandoned, but vacant big box stores, sometimes hundreds of miles away, and saying, hey, if you want to assess what the fair market value of these stores is, you should be looking at the ones that we've sold. And in a lot of cases, a big box store might cost $10 million to build, but it only sells for $3 million. And you might think, well, why the huge difference? Well, sometimes the stores are have deed restrictions on them, limiting what other retailers can come in there. Walmart doesn't necessarily want a Target moving into one of its vacant stores. Sometimes they're in a less desirable neighborhood. Sometimes they've just been sitting vacant for years, so they've deteriorated. So there's a lot of reasons these stores can sell, but the reason the lawyer representing the retailer says is just because these stores are built to suit the needs of a specific retailer, and a Walmart doesn't necessarily want to move into a Target like you wouldn't want a suit that was tailored, for me. So that's where this discrepancy comes in, and the rub, though, is that it's in the millions and millions and millions of dollars, so these cities are now losing a lot of property tax value.
So that's what's so interesting is that, one, it's a sort of enterprising attorney that came and found this and brought it to their attention. But let's talk about the towns that they're in, because obviously paying fewer taxes, that means less money. What are some of the effects that you saw and you wrote about?
Yeah, so a lot of these smaller towns especially have grown increasingly dependent on retailers, consumer spending to drive their economy when other industries, mainly manufacturing, has dried up. So, I went to these towns in northern Michigan. Sault Ste. Marie, Michigan was one of them, 14,000 people. Marquette Township's on the other side of the Upper Peninsula in Michigan. I went there. They have about 4,000 people in that township, traditionally tourists, mining, lumber communities. So they were very dependent on this revenue. And so when all the big box retailers started making this new argument and the value of their stores was going way down, they were losing hundreds of thousands of dollars in property tax revenue. So that has to come from somewhere. It comes from police and fire. It comes from the animal shelter. It comes from the roads. It comes from parks. It comes from schools to some extent. Even though the state ends up paying them back for money they lose from the schools, someone then has to recoup that money. So we found libraries that had their hours cut. A group home for troubled teens was closed. There was a fire department, a fire chief I talked to who said, he really needed to replace his fire truck, but he just had no money to do it because of the money he had to give back to the retailers after these decisions caught on.
So lots of real-world effects there from
absolutely.
The retailers cutting down their property tax bill. Thank you so much.
Thank you.
Shannon Pettypiece with the latest here on the novel ploys used by some big box retailers. Still ahead.
Commodities closed.
There we go.
Oil looking to snap its two-day slide. Oil's been down, but today seeing a little bit of green, up about almost 2%. This is Bloomberg.
headquarters in Midtown Manhattan. This is Bloomberg Markets. I'm Scarlett Fu. Commodity markets are closing in New York, so let's get your check on today's big movers, or at least some of them. Oil climbing on optimism that non-OPEC members can be persuaded to cut production output. You can see their prices up by better than 2% right now, $50.88 a barrel. We want to stay with the energy complex because nat gas inventories, the supply, fell last week. Traders are looking past stockpiles now to a bitter cold ahead. So we're going to have more on that, dive deeper into that in just a moment. At the moment, you can see prices settling up by 2.6%, $3.69, getting to that $4 level. And we want to move over here and take a look at a spike in China's copper imports. This is a 5-year chart, and it shows the recent gains. And in fact, the imports rose by the most in 8 months. The first gain, I should say, in 8 months. The chart is available at #BTV3628. China, as you know, is the biggest consumer of the metal. And according to the country's top metals producer, copper demand in China is expected to grow 4.5% over the next year. That old economy making a little bit of a comeback in China. Oliver?
Thank you, Scarlett. Back to natural gas prices. They're getting a boost from the cold snap that we're finally expected to get this winter, as unseasonably warm November had bloated U.S. stockpiles. Our next guest says the market should read this fast pace of storage withdrawals as bullish. Joining us now with that call is Nicholas Potter, commodities analyst at Barclays. So let's talk about the seasonal element first here. A little bit of, as Scarlett just pointed out on that chart, inventories really have nowhere else to go, right? Because they're pretty close to zero at this point. So what's going to happen?
Well, we had a little bit of a hiccup in the bullish gas thesis heading into the winter. Everything looked like it was lining up pretty well. We had higher export levels, production was falling, and everyone was forecasting a colder winter. Lo and behold, October, November came in pretty warm, and gas sold off pretty hard at that point. Now we're seeing some December forecasts that are actually looking pretty cold, and you can see that gas prices have really taken off from there. So the bullish gas thesis is back, and now it's just a matter of if the cold can kind of hang in there, and we can continue to see prices head higher from here.
And this colder weather, this comes as a surprise because it typically doesn't get this cold in December, right? I mean, people are gearing up for it in January or February, maybe.
Yeah, I mean, Decembers can get pretty cold, but if you look at the last few years, we've had some pretty balmy December periods. So I think initial forecast from some of these weather forecasters that said November weather, which was warm, was going to kind of bleed into December. And there was a revision to that forecast, and that's really when gas prices started to take off.
Let's check out the chart real quick. We can dive into my terminal here because I see, maybe this is a coincidence, maybe not, is the fact that we're seeing this turn up here a couple days after the election. This is the realization of this seasonal effect, or are people looking at what's going to happen with Trump here?
Now, this is completely short-term driven. So in the short term, weather is the biggest driver. So when we're looking kind of the next few months and even through 2017, this is all supply-demand driven. Now, if you want to talk about the back of the curve, 18, 19, 20, I think that's when you start to maybe see some Trump impact there as people look at environmental policy, drilling policy, kind of different policies that could actually impact the E&P world.
And I'm glad you bring that up because I want to get your thoughts on Donald Trump's nominee for EPA, Scott Pruitt. How far will he go in terms of dismantling regulation, and what does that mean for nat gas prices maybe 18, 20 months out?
Well, that's the thing. I think the knee-jerk reaction to Trump's election was that things like the Clean Power Plan were at risk. And the Clean Power Plan is this policy that was put into place to limit emissions from the power sector, which was going to be a negative for coal, so a positive for gas and renewables. So if Trump, of course, is not in favor of that policy, and Pruitt goes along with that, you could see less demand destruction for coal, which would actually be a positive for coal, negative for gas, and potentially renewables. So the idea that they have appointed Pruitt, who comes from Oklahoma, normally an oil and gas friendly state, I think that might be the first kind of shot across the bow that the Clean Power Plan and some other policies like that could be at risk in the next few years.
Trump talks about bringing jobs back to middle America. He also focuses on the energy space as well. Do you see a scenario in which he can rejuvenate some of those industries that have slowed down as we shift towards cleaner energy, all that type of stuff?
It's going to be really hard, and we've talked a lot about this in our research. It's really not a policy-driven decision. It's really market-driven. So the last few years, the reason gas has gained so much ground against coal in the power sector has just been entirely price-driven.
Economical.
Economical. So even if,
even if Trump was to come in with some very hard-handed policies, just the pure economics of this still support gas in the power sector, I'd say, over coal. So unless there was some crazy mandate that came out saying you have to burn coal, it's very unlikely on the pure economic standpoint that shift will actually occur.
Okay, great stuff. Good analysis. Nat Gas, looking at weather, looking at Trump. Nicholas Potter, he's Barclays Capital Commodities Analyst. And we're going to throw it over to Julie right now. She's got some breaking news on casino stocks that are plunging in the trading session off some headlines. Julie, what do you got?
Yeah, the South China Morning Post is reporting that China is cutting in half the amount that money account holders of China UnionPay can withdraw from ATMs in Macau. Of course, that's the world's biggest gambling market. So the limit that is being imposed here by the Monetary Authority of Macau, it takes effect this Saturday, and it cuts the withdrawal limit to 5,000 patakas. Again, all of this according to the South China Morning Post. We saw an immediate dramatic effect on these stocks that trade here in the United States. Wynn Resorts down by 9% now, plunged initially and then came back a very little amount. But it's not just Wynn. We're seeing this effect as well among the other casino makers that operate, casino operators in Macau, I should say, including Las Vegas Sands and MGM. So Las Vegas down 9.3%, and MGM Resorts also seeing a steep tumble, all of them basically having the same move here, although MGM is not down quite as dramatically, down by almost 4%. What's interesting also is that some of these stocks have been coming back, particularly MGM. They've been coming back recently on the view that there was more of a recovery at these casinos in Macau, despite the fact that we've seen the Chinese government try to crack down on corruption there. So this latest headline does appear to be quite a significant setback. At least initially, that's the market reaction to these headlines, Scarlett.
All right, good stuff. Thank you for keeping an eye on that. Julie Hyman with the latest on those casino names. We want to get you to the headlines on Bloomberg First Word News at this hour. Emma Chandra has more from the newsroom. Emma?
Thank you, Scarlett. President-elect Donald Trump is about to take off for Columbus, Ohio. We're looking at live pictures there of his plane at LaGuardia. He plans to meet with victims of last week's Ohio State University attack before taking his thank you tour to Des Moines, Iowa, on his third post-election victory celebration. Tomorrow, he's holding rallies in Baton Rouge, Louisiana, and Grand Rapids in Michigan. Russia's foreign minister says Moscow and Washington have agreed to call a meeting to discuss the withdrawal of Syrian rebels from Aleppo. Sergei Lavrov said that after talks with U.S. Secretary of State John Kerry in Hamburg, they decided military experts and diplomats will meet in Geneva on Saturday. Lavrov says the Syrian army has suspended its advance to allow some 8,000 civilians to leave the city. President Obama tells CNN that people may have viewed him differently because of his race. The president says that he, quote, absolutely faced racism while in office. But the president said he doesn't see racism in the mainstream opposition to him, but he does see it on the fringes. The U.S. Surgeon General is calling e-cigarettes an emerging public health threat to the nation's youth. Vivek Murthy says there needs to be more research into the effects of vaping. He says e-cigarettes aren't harmless and too many teens are using them. 16% of high school students reported at least some use of e-cigarettes, including some who've never smoked a conventional cigarette. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. Scarlett.
All right, thank you so much, Emma. Coming up, fast food CEO Andy Puzder, a sharp critic of minimum wage hikes, may end up as labor secretary. How that impacts workers next. This is Bloomberg.
And we're awaiting President-elect Donald Trump, who's about to take off from LaGuardia Airport here in New York. He's going to be headed to Ohio and then Iowa. In Ohio, he'll be meeting with first responders who responded to the attack at Ohio State University, which ended up injuring more than a dozen people. President-elect Donald Trump intends to nominate Andrew Puzder as Labor Secretary as well. Also in the news, Puzder is chief executive of the company that owns the Hardee's and Carl's Jr. burger chains. He also opposes raising the minimum wage, according to people familiar with the plans. So to discuss all that, joining us now from Washington is Margaret Tlaib, Bloomberg's senior White House reporter, and Chris Offer, Bloomberg's Bureau of National Affairs reporter. Welcome, guys. Let's start talking about Puzder here, because we always like to keep track of what's going on with who's being nominated. I guess, what do we know about this guy? Obviously, he's a CEO. Let's start there, Margaret. What do we kind of know about where his background is?
Right. Well, of course, you know these fast food chains. We've all eaten at them. Hardee's, Carl's Jr. These are household names. Even if he is not a household name, he is very much representative of a person who, in terms of their outdated policies already, would be a real refutation to the Obama administration's policies and desired policies, whether it's on overtime pay. He's an opponent of Obamacare. He's moved toward part-time workers, perhaps as a result of Obamacare, perhaps as a result of the overtime. So this is different than something like a General Mattis pick for defense, where there's bipartisan consensus. This is a real kind of poke in the Democratic establishment and saying, we're going to challenge not just labor policies, but anything in that constellation of labor policies that President Obama moved in.
Right, as you mentioned, again, against unions, against Obamacare, against overtime pay. I wonder, Chris, what kinds of conflicts of interest might need to be resolved, since he is CEO of CKE Restaurants?
That's right. There will certainly at least be some questions about conflicts of interest. Our reporting has shown that Hardee's and Carl's Jr.'s have been the subject of numerous investigations by the Labor Department's Wage and Hour division into overtime, minimum wage, and other allegations of worker abuse. And so a lot of those cases have been closed, and many of them include franchise restaurants that are not actually owned directly by Mr. Puzder's company. But certainly they raise some questions that he's going to need to answer about how he will be involved in investigations going forward.
Chris, you talked about this in your article. If you can elaborate a little bit sort of on his business track record. What do we know about the company, apart from, of course, those sensual burger ads with Paris Hilton, et cetera?
That's right. He's had to defend those ads, and I think he was quoted somewhere saying that they were very American and a representation of the way that American business operates. He's certainly a fan of those ads, bikini-clad women eating hamburgers. But in a very Trump way, we've seen Mr. Puzder speak directly to people through his own blog, and when he does that, he's used that as an opportunity to rail against all types of Obama administration regulations, most notably minimum wage and overtime.
You know, he's not an obvious candidate to be Labor Secretary, Chris and Margaret, because he has supported in the past for automation at its stores, and his job, Margaret, will really be to boost employment, right?
Well, I mean, look, certainly President-elect Trump wants to come out of the gate as a job creator, and this is a really interesting messaging question, to have run for president, talking to a swath of working-class voters across racial boundaries, saying, you know, I know that you need to earn more money, that you're being left behind, kind of picking up and running with that economic inequality message. How voters reconcile these two issues, if, depending on how these confirmation hearings go, is going to be really, really interesting. There's also a sure fight with the Democrats, because you have both the Labor Democrats and kind of the women's rights Democratic coalition. So there are some nominations where President-elect Trump appears to be seeking to avoid a fight. This is not one of those.
I wanted one last question here on Puzder, because I grew up in the West and Central America, and I remember when I was a kid, Hardee's was just, what is this company? It's going to go under. And then all of a sudden it came roaring back. So with his sort of business credentials here, what do we know about the way he ran his company, Chris, and what did you find out when talking to people about what potentially he could bring to the table here that Trump and his team are excited about?
Well, what we do know is that they were aided by the Carl's Jr. brand has certainly helped the case there for that company. And one of the issues that we're taking a look at, and one that he may bring to the table for DOL, is automation. He's been a champion of automated machines, perhaps replacing workers at cashiers and elsewhere at his stores. And so he's going to have to explain that and what happens to those jobs when they go away. An interesting thing to see is I think the way he will pivot is to move towards worker training and retraining, apprenticeships, trying to focus on getting people trained for the jobs of the future, things that are going to come up as the economy and the workplace changes.
Margaret, we want to get your take on some of the other nominations that Donald Trump has made to his cabinet. Still nothing on Secretary of State, right? There's still nothing decided there?
Right. It could either be like 5 seconds from now or sometime in the next couple of weeks. We've seen this real ping-ponging of the idea that things have coalesced around 1 or 2 candidates and then that the search has been broadened. So that's the big one that everybody's waiting for. But, you know, 3 is a trend, and this nomination of retired Marine General John Kelly for DHS it has raised and is raising this question about generals. Are there too many retired generals in President-elect Trump's expected sort of cabinet or inner circle of advisors if there's Mattis at the Pentagon and Flynn at the NSC. But there's not really a clear consensus on this yet. There's certainly debate about it, but there is a difference between an active general and a retired general, and there is, generally speaking, a move toward militarization across all of these fronts post 9/11. So these are areas in which some military experience may make sense, but it is a debate we expect to see play out in the coming weeks.
Margaret, Trump, as we just pointed out, is getting ready to hop on a plane. He's going sort of to the Midwest. What's his plan? What's he aiming to accomplish here?
Well, you know, it's what we're seeing with Trump over the next couple of today and the next couple of days is a jobs message, and again, this sort of thank you message, thank you for winning. But he is attempting in each of these stops to explain the nominations he's made to date in the context of his victory and his vision for the country, and to portray them as unifying, even in fact when they are divisive.
All right, Margaret Tlaib, Bloomberg senior White House reporter, and Chris Opfer of Bloomberg BNA giving us the latest on Trump and his picks. Thanks so much, guys.
Let's get your check on the financial markets. Julie Hyman has today's Sector Spider Report. Jules, what are you looking at?
Hold on just 1 second. Here we go. I'm taking a look at what's going on with the ETFs that tracks the financials. The XLF, which is up 0.8% today. It's one of the best performing ETFs that we do track here. And it's consistently, of course, been one of those best ETFs that we track among the various sectors. You can see with this gain, by the way, that it is also at its high since February of 2008. So it's been on this track of rising. And not only is it on this track of hitting a multi-year high, so are some of its components. Bank of America, JP Morgan, and Citigroup are all at records in today's session as well. Of course, this is what's interesting is because of this recent trend that we have seen, you could argue that this ETF is in so-called overbought territory, but it keeps going up. Take a look at the Bloomberg here. This is #BTV3433. It looks at the RSI, the Relative Strength Index. It's a momentum indicator at the bottom here. Theoretically, when it goes above that red line, it's overbought. It's due for perhaps a little bit of a pullback, and yet that pullback has not happened. So we'll see how long it can manage to stay above that line. Of course, one of the things that has been fueling this has been what we've seen happen with the yield curve, not just here in the U.S., but in Europe as well, as evidenced by what happened today in reaction to the ECB extending out its stimulus, even though it is shrinking the monthly amount to some extent. So what we have on top here is the Bund spread between the 30 and the 2-year, and then the U.S. Treasury spread between the 30 and the 2-year. And of course, we have had this widening out, this increasing of that spread between the two, which traditionally does presage economic expansion. On the bottom here, this is the difference between those two spreads. So in other words, we are seeing them come closer and closer, this correspondence between yield curves in the U.S. and in Europe. In fact, it's the closest it's been, getting very close to zero, in fact, closest it's been going back to 2012. So this is one of the major factors, besides the idea that there could be decreased regulation. This is one of the major factors that's been fueling the gains within the financials. Oliver?
All right, great stuff, Julie. Love a good double panel chart. Thanks so much. Coming up, we dive into Mario Draghi's decision today. Will extending the length of stimulus boost Europe's economy? We'll find out. This is Bloomberg. And we got some breaking news with casino stocks falling today. We're looking at what Julie just pointed out, some of these companies dropping as much as 9–10%. In fact, we've got an intraday chart here on my Bloomberg, if we can jump in real quick, just showing three of the big ones here. Wynn, Las Vegas Sands, and MGM, all down quite a bit. And I was also just looking at short interest, Scarlett, on some of these companies that was actually getting pretty low. These are companies about a year ago people were pretty short on as they were trying to figure out what Xi Jinping was going to do about cracking down on the largesse and all that type of spending in Macau. So some of these traders are going to be on the wrong side of the trade. You've got some here looking at revenue.
Yeah, well, this is the backdrop here for these casino names because casino revenue in Macau has actually been rising. The trend is to the upside. For the fourth month in November, we saw a tick higher. Come inside the Bloomberg here. This is courtesy of our analyst at Bloomberg Intelligence, and this data just came out at the start of the month. And the reasons are multifaceted, yeah. An increase in overnight visitors and easier annual comps because, again, you did have the impact of Xi Jinping's anti-corruption drive bringing down those numbers a year ago. Joe Weisenthal, our co-host on What You Missed, always likes a good casino story, and you've been tracking Macau casino revenues for a while, so this is kind of an ongoing fascination.
Yeah, I love looking at this indicator, and of course there's a widespread understanding that one way in which people in China who have money get their money around capital controls, get their money out of the country, is to go to Macau, buy a bunch of chips, gamble at some game where maybe you're expected to lose like 1.5% of your money, then cash in your chips afterwards, and then you have your money out of the country, and then you can get it wherever you want. So if there, this report in the South China Morning Post about a cap on how much you could take out of ATMs in Macau suggests, the implication that people are reading to this is that China is trying to tighten the screws, make it even harder to get a lot of money out of the country. And so obviously, if you recycle money through these casinos and you're making that harder, it makes sense what happens with
So it's another form of capital control.
Yeah, and we were literally just talking yesterday on the show that now China's FX reserves are down $1 trillion from the peak that they were in summer of 2014. There are a lot of moving parts to that, but clearly one moving part is the ongoing desire of people with money in China to get it out of the country. And a move like this, in addition to affecting those casino stocks directly, you have to wonder what it says bigger picture about China continuing to sort of stamp out various efforts of getting money out.
It's whack-a-mole.
It's whack-a-mole, right.
I was just going to say also just some specifics from the story. They're dealing with the China Union Pay accounts, so how much you can withdraw from ATMs, and the dollar amount in U.S. dollars is $626. It doesn't seem like a lot of gaming to be done then.
No, it's not, and $626, that's not like a very efficient way to ferry a bunch of money out of the economy. And of course, those Union Pay cards, sort of popular way that people in China pay for stuff domestically and internationally, and trying to crack down on that.
All right, so let's just pivot a little bit here because we also want to get your thoughts on the ECB.
There's more than just a
There is. Yeah, life beyond the Macau casino stocks.
Got to get out of the casino, John.
And the casino revenue. When it comes to the ECB, was Mario Draghi hawkish or dovish? People have a big debate over that.
Yeah, I mean, the initial read of his, sort of the first interpretation of Mario Draghi's announcement was that in the future they're going to diminish the amount of monthly bond purchases. But then people realized that they're actually extending it longer and that they've sort of gotten rid of the bottom yield cap on what they'll buy. So in the end, its sort of interpretation is dovish, and I think the market reaction is really expressed in the steepening of the German yield curve. We've been seeing curves steepen everywhere in the world lately, but this makes sense. If you sort of see more inflation down the road, but lower for longer in the short term, you would expect a flattening of the short-term yields, a steepening of the long-term yields, and then get that steepening curve.
All right, Joe Weisenthal with the interpretation of the ECB, and of course,
you like my visual?
There you go. And of course, his interpretation of the Macau casino stock decline. Coming up on What You Missed later today, we're going to have more on Europe's economy with George Magnus, former chief economist at UBS. This is Bloomberg.
It is 3 p.m. in New York, 12 p.m. in San Francisco, and 8 p.m. in London. I'm Oliver Rennick.
And I'm Scarlett Fu. Welcome to Bloomberg Markets.
We're live from Bloomberg World Headquarters in New York for the next hour. Plus, we'll be covering stories in Dallas, London, and Frankfurt. Here's what we're watching. Stocks are gaining again today as U.S. averages seek to close at another record-breaking level. Financials and materials among the biggest gainers, while casino stocks, as we were just talking about, are plunging. Then, despite increasing competition, Southwest Airlines is posting some of its biggest profits ever. We'll hear how the discount carrier is surging higher when Scarlett speaks to CEO Gary Kelly. And Donald Trump is on his way to Ohio at this hour to meet with first responders as he continues to fill out his cabinet. We'll have the latest on Trump's potential picks. And with an hour away from the close and records in sight yet again, let's talk about what's going on here. Stuff continues to shift around in the stock market.
Yeah, we're seeing sort of a come down from the highs of the session here for the major average. The Russell just continues here with its gains, and it is at a record. The Russell 2000 of small caps up at 1.1%. The Dow, the S&P, and the NASDAQ have seen about a halving of their earlier gains in some cases here, although, again, they did still touch those intraday records, but a little bit of a loss of momentum as we get closer to the close of trading. And we have continued to see this rotation that we have been talking about ever since the election here. This looks at the aggregate market cap of both the stock market around the globe, but that's the white line here, and the Bloomberg Barclays Global Aggregate Market Value of bonds. And essentially, we've seen this divergence that we've talked a lot about. What's interesting is that stocks have added almost $2 trillion in their value since the election, and we have seen bonds lose about the same amount. So that's the carnage that we've seen in that bond route and the addition in value that we've seen in the stock market. Again, today, if you look at what's going on in bonds, following on the ECB's announcement this morning, we continue to see a sell-off in bonds and yields move a little bit higher, even though that action there was seen as relatively dovish, but it is a little bit of a reduction in the monthly amount that we're seeing the ECB buy back. So here we have the 10-year yield up by 5 basis points. We've been talking a lot about the casinos in the past half hour or so as they are tumbling at the moment. Wynn Resorts, Las Vegas Sands, MGM. We just were talking about it with Joe Weisenthal as well. This report in the South China Morning Post that China is cutting in half the amount of money that money holders in China UnionPay can withdraw from ATMs in Macau. This tumble coming on the heels of what has been stronger performance for these casinos. What's interesting is even though these are not very heavy weightings in the major averages, the tumble here coincided with that little bit of pairing of gains that we saw overall in stocks. And then finally, another stock that saw some late day news that caused a tumble is Express Scripts after Citron Research mentioned it in tweets and said that the company is the culprit behind pharmaceutical price gouging. Express Scripts coming back in a statement saying it is a market force that uniquely puts medicine within reach by driving down cost of care and improving health outcomes. So a little bit of a war of words that we're seeing between Citron, short-selling research firm, and Express Scripts as those shares falls by 7%, Scarlett.
All right, we'll keep an eye on that one. Thank you so much, Julie Hyman. Let's get you now a check of the headlines on Bloomberg First Word News this afternoon. Emma Chandra has more from our newsroom. Emma?
Thank you, Scarlett. The House has passed a stopgap spending bill and will send it to the Senate, where it may force a weekend session. A major sticking point is said to be health benefits for minors. Current stopgap funding ends tomorrow, and lawmakers may have to pass a temporary one to avoid a government shutdown. If approved, the measure would keep the government funded until April the 28th. More than half of registered voters say that President-elect Donald Trump will change Washington. 55% say that Trump's cabinet appointments reveal his plans to change things. That's according to a Morning Consult poll, and 51% say Trump is ignoring the D.C. elite while making his cabinet picks. A powerful magnitude 7.7 earthquake struck the Pacific Solomon Islands, prompting authorities to issue tsunami warnings for several nearby island nations. The U.S. Geological Survey said the quake hit about 120 miles southeast of the capital of the Solomon Islands. Officials say tsunami waves were possible in 7 different areas near the epicenter, including Vanuatu and Papua New Guinea. A federal judge has denied a defense request for a mistrial in the Charleston church shooting death penalty trial. Defense attorneys claimed a witness's remarks that Dylan Roof is evil and belongs in, quote, the pit of hell were inappropriate. Prosecutors say Roof was looking to start a race war by killing 9 black churchgoers after joining them for Bible study last year. In another development, Roof's lawyers say his mother suffered a heart attack after listening to the opening statements. No word on her current condition. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. Scarlett.
Thank you, Emma. The U.S. airline industry has never been more competitive and is stronger today than at any point in modern history. That, at least, is according to Southwest Airlines CEO Gary Kelly. He cites higher profits and increased demand for less expensive fares. Earlier today, I caught up with Gary Kelly and asked him on the benefits of Southwest's 5-year, $500 million technology overhaul.
I think what we'll see immediately is less visible to the customer. The first release of our new technology went in this week. It was a flawless execution. I'm very proud of our folks. And then these bookings are for flights after May the 9th of next year. And at that point, we'll be down to one reservation system, and we'll be flying these bookings on our new system. So that'll be a key step as well. It just gives us the capability to be more specific flight by flight with some of our fares. We'll have better customer experience techniques, especially when we have delayed or canceled flights. It sets the stage to really enhance the information exchange between the company and our customers with mobile and other applications. But for the most part, Southwest.com is unchanged. Our mobile application is unchanged. And it should be pretty invisible to the customer.
A lot of customers also want to travel abroad, and you already have one route to Cuba. 2 more will launch next week. There have been concerns from your competitors, American, Spirit, and United, that there's too much capacity from South Florida to Cuba. Do you share those concerns?
I think that's silly. You know, we're just getting started, and there's really no history from which to make predictions about what capacity is needed. And we have a lot of experience developing new markets at Southwest over 45 years. In fact, when I started 30 years ago, we had 60 airplanes, and now we have 723. So that's just an element of the unknown that one needs to be patient with, and we're excited about the opportunity. We make a commitment to the community, and we plan to stick with it.
Which airports do you feel need the most improvement, and would that open new doors for you?
Well, we need to do that. There's no question. The top priority, though, is the air traffic control system. You know, the irony is we could spend all the money we want on the ground, but if we don't have a way to manage the flights in the air, it will be all for naught. But you know, we're spending a lot of money on airports. We've invested in modernizing Dallas Love Field. We built a new international terminal at Houston Hobby. We've got another one coming at Fort Lauderdale. There's a $500 million makeover going on at LAX right now. Major project going on here at LaGuardia. So the money is there. The money is being spent. We need to continue that, and if there are opportunities to continue to invest in airports around the country, we need to do that. But I'm not as worried about that, because that work has been done well, is continuing, and there's a path forward there. Where we're not making progress is with air traffic control modernization, and I think that's where the real opportunity for improvement is.
What's the biggest obstacle there?
Well, it's complicated, but the men and women who are air traffic controllers do a phenomenal job, but we're asking them to use 1950s technology to do that, which is horribly expensive to maintain and obviously doesn't take advantage of current technology. So in its simplest form, airplanes do not fly as efficiently from point A to point B as they could. It is not as the crow flies. So there are opportunities to take advantage of satellite-guided navigation systems, and vastly improve the efficiency of the flight profiles. So that's in its simplest form. It's complicated because there's so many flights. It's complicated because of communities where airplanes might fly over.